Hi, I'm Jeff Banks from MW Lomax, and this is the Banks Report.
The Banks Report, a commentary by noted property and business tax consultant Jeff Banks. Jeff is not your ordinary accountant and speaks in words and terms that you understand.
In my practice, I help people who are working hard and using property and self-employment to help them reach their financial goals. The end of December is fast approaching, and for those of you who own property, potentially that means land tax. For those of us in business, it means the end of another quarter and time to collate all those records for the next quarterly business activity statement. Land tax is levied differently in each state of Australia and generally applies to the unimproved capital value of land held at midnight on 31 December. There are exemptions for principal places of residence, your home, up to certain values in some states, and there are thresholds at which tax is imposed, which again are different in each state. There are also different regimes across each state for individuals, trusts and companies. Another taxation minefield really. It's a bit all over the place. Because it's confusing, we at MW Lomax offer assistance, which is as close as the email. Contacting us at landtax@mwlomax.com.au can put you in touch with one of our specialist team. They can send you a summary of the tax thresholds and the land tax rates for all states, or assist you in deciding whether or not you need to lodge a land tax return. I often get asked the question about using a discretionary trust to hold investment properties when the threshold for land tax is often non-existent. That means certain types of trusts pay tax from the first dollar of value. To me, the discretion of the trustee at the point of sale to distribute to beneficiaries and potentially dissipate capital gains tax liability is of far more value. It's a price one pays for that flexibility. One of the things that bugs me above anything else when preparing a BAS is the temerity of business owners who moan and groan about the taxes they have to pay and how it's an unexpected cost. Some see it as an unwarranted impost on cash flow. The GST means everyone in business or employing staff are unpaid tax collectors. None of us like it, and the sooner the moaning realise that there is no escape and start acting like business people, the sooner they can understand that the non-control of business finances is one of the major factors of business failure. Okay, off my high horse then. It's the end of the quarter. Wouldn't it be better to know and start planning the December quarter BAS payment? Whilst we have until the 28th of February to lodge it, the knowledge of the amount and the subsequent planning of cash flow to accommodate the payment would be a very prudent business strategy, wouldn't it? One simple way is this. Every time we get an invoice paid, you could take the GST and put it into a separate account. It's not really your money, so don't get stuck by using it for cash flow. At the end of the quarter, there is no scrambling to find funds. When we set this up for our clients, they report a huge sigh of relief. As I've been known to say, information is power, and the more quality information we have, especially when it comes to our businesses, the more powerful we become. This extends to being more in control of our own destiny. Do you want assistance with BAS preparation? Or do you want to set up an automatic GST transfer into a BAS account so there is no panic at the end of the quarter? If you do, then simply contact your client account manager for those clients of MW Lomax, or contact us at compliance@mwlomax.com.au and we can get one of our experts to help you. Of course, the first call and advice will be free.
The Banks Report is created by Jeff Banks of MW Lomax, a specialist financial services firm offering strategic advice and services you need in property and business, including accounting, taxation, finance, financial planning, risk insurance, superannuation, and business advisory.